Hey everyone, and welcome back to the channel. Today, we're diving into the question on every crypto investor's mind. Is Bitcoin's recent dip a sign of a deeper correction, or the perfect opportunity to buy the dip before we launch towards a new all-time high? The charts are flashing a potential retest of a key support level, but what if this isn't about technicals? What if it's all about something far more fundamental, liquidity? We're going to break down how global liquidity trends are dictating Bitcoin's price movements, why big players are stepping in on these dips, and if that mythical $107,000 target is truly within reach. You've probably noticed the recent price action. After a strong run, Bitcoin has cooled its heels, consolidating and even seeing a sharp rejection after testing highs around the $117,000 level. This has put us squarely in a crucial support zone, with some analysts pointing to the $108,000 to $110,000 range as a critical line in the sand. But what's driving this? Is it simply profit-taking from retail investors, or is there something bigger at play? To understand what's happening, we need to look beyond the daily charts and consider the macro environment. The most powerful force influencing Bitcoin's price, especially over the last few years, isn't just supply and demand, it's global liquidity. Think of liquidity as the amount of cash and credit available in the financial system. When central banks are pumping money into the system, and interest rates are low, there's a flood of easy money. This money has to go somewhere, and it often flows into risk-on assets. You know the ones: tech stocks, real estate, and, of course, Bitcoin. Historically, there's been a very strong correlation between Bitcoin's price and global liquidity. When central banks tighten monetary policy, pulling money out of the system, risk assets suffer. We saw this play out in a big way in 2022. But when policy shifts and liquidity starts flowing again, Bitcoin is often one of the first assets to feel the tailwinds. And this brings us to the present. Recent signals from the Fed and other central banks, including potential rate cuts, have created a more favorable environment. We're seeing institutions and large players, like MicroStrategy and Metaplanet, continue to accumulate Bitcoin on these dips. These aren't small buys. We're talking about thousands of BTC. This is a critical signal. It tells us that while the short-term market may be consolidating, the long-term conviction from smart money is only getting stronger. They're using these pullbacks as an opportunity to add to their positions at a discount. This institutional, dip buying, is a powerful force. It provides a solid foundation for the price and creates what's known as a liquidity pool below the current trading levels. Think of it like a safety net. The market knows that if the price drops to a certain level, there's a huge wave of buying demand waiting to come in. This is exactly what analysts are talking about when they mention the $107,000 liquidity pool. Now, let's get back to our central question. Is Bitcoin heading to $107,000? The short answer is yes, it's a distinct possibility. The charts show a clear liquidity sweep below the $110,000 mark. If this support zone doesn't hold, the price could very well retest the next major support level, which happens to be around $107,000. For traders, this is a technical risk that must be managed. But for long-term investors, it's a potential gift. This is where the psychological aspect of investing comes in. When the price is falling, and the headlines are full of FUD, it's easy to panic. We've all been there. But what separates successful investors from the rest is their ability to see the bigger picture. They understand that volatility is the price of admission for an asset like Bitcoin. They're not focused on the day-to-day noise, they're focused on the long-term fundamentals. And the fundamentals for Bitcoin remain stronger than ever. The approval of spot Bitcoin ETFs has brought an unprecedented amount of institutional capital into the market. These are not fly-by-night investors. These are pension funds, sovereign wealth funds, and other major financial players who have been given a green light to buy Bitcoin. The demand is structurally sound and growing. So, what does this all mean for you? If you're a long-term hodler, a dip like this is an expected part of the journey. It's a chance to accumulate more. If you're a trader, it's a crucial moment to watch those key support levels and manage your risk. But regardless of your strategy, it's essential to understand that this isn't a random drop. It's a market readjustment, fueled by a combination of technical factors and the underlying ebb and flow of global liquidity. The path to a higher price is rarely a straight line. There will always be pullbacks, shakeouts, and moments that test your conviction. But when you understand the forces at play, when you see that these dips are often driven by institutional forces accumulating rather than retail fear, you can approach the market with confidence. The question isn't whether Bitcoin is going to fall to $107,000, but rather, if it does, are you ready to capitalize on the opportunity? That's all for today's analysis. Let me know in the comments below what you think. Are you a dip buyer or are you waiting on the sidelines? And what's your price prediction for the end of the year? Don't forget to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next update. Until then, stay safe out there, and happy investing.